Right, everyone, super quick one today. It is the daily crypto roundup, and what a crazy few days we've had. Obviously, Monday was bank holiday in the UK, and we had the JP talking on Friday at Jackson Hole, which basically sent the market into free-for-all, for want of a better phrase, as he obviously mentioned about the need to continue his battle and the Fed's battle with inflation, and that households are going to be under a little bit of pressure. And I paraphrase there, but it was not good. It was certainly not a good day in the markets on Friday. But as we continue into August, has been usually relatively the volumes are at least less in August. And as we move out of August, because everyone's on vacation, everyone's on holiday, and as we move into September, volumes start to pick up. So it'll be an interesting month, especially as we have got the interest rate decision in the US coming, and we've also got the Ethereum merge as well, which, if my memory serves me right, is around the 15th of September. So, obviously, things are a little bit flat. US market opens in half an hour. And we can see, we just go on the Bitcoin chart for the last few days, and we can see this was on Friday. And we dropped well below, we dropped below 20,000. As well, 19,662. Obviously, 20,000 is a really big, important number, and it's usually the floor a lot of the times, or it's at least support for Bitcoin. And we've slowly jumped up a little bit, a few $100s above the $20,000 mark. So we'll talk a little bit about this in a bit more detail. And as per usual on Twitter, we're seeing people calling for 10k Bitcoin, 13k Bitcoin, 15k Bitcoin. It is possible that we could get certainly to 15k if there's another shoe to drop. I don't think that we will. I think there's too much money involved, and people would pick up some real big bargains, and the whales would come in and scoop up those coins, but anything's possible. I've certainly seen ever since Friday, the past 3-4 days have been one of the most sort of bearish I've seen on Twitter in a long time, with people talking about obviously recessions and next shoes to drop, and risk assets and inflation and interest rates, and people are not buying homes, etc., etc. Which leads us nicely on to this story of Steve Hanks saying we're going to have one whopper of a recession in 2023. Some of the key points from this interview was that he believes the US economy is going to fall into recession next year, and then it's not necessarily because of high interest rates. And he says we will have a recession because we've had 5 months of zero M2 growth, money supply growth, and the Fed isn't even looking at it. Meanwhile, inflation is going to remain high because of unprecedented growth in money supply in the United States as well. And he mentions this is why. So historically, there's never been sustained inflation that isn't the result of excess growth in money supply, and pointed out that money supply in the US saw unprecedented growth when COVID began 2 years ago. He said that is why we are having inflation now, and that is why, by the way, we will continue to have inflation through 2023 going into probably 2024. The bottom line is we're going to have stagflation. We're going to have the inflation because of this excess that's now coming into the system as well. And the problem, he also mentions, the problem we have is that the Fed Chair Jerome Powell does not understand, even at this point, what the causes of inflation are and were, he said as well. So, again, this comes after JP met at Jackson Hole with other central bankers back on Friday as well. And talking about what happened on Friday, these are some of the important economic data points that we need to look out for. I've spotted this morning, Tuesday, building permits in Australia. Unbelievable. Obviously, building permits are basically a really good leading indicator into what the economy is doing, certainly in building, which obviously has an impact, sort of an impact on inflation, interest rates, etc. We can see here building permits, which is basically people, construction companies submitting permits to local authorities, etc., to build buildings, is down for the month. Month over month for July is down nearly 20% from a previous of 0.6. The consensus is that it would be minus 2%, which is astonishing. And the building permits year over year are down 25.9% for July. So July just gone year over year to July in 2021 is down 25.9%. Incredible stuff happening in Australia there, which is not good at all, which basically means construction is starting to significantly contract at negative 17.2%. And then we have some CPI data from Spain as well. A nice little figure of 10.4% inflation. Yay! Things are getting better in Spain. And obviously that is the figure that's put out there by their own government. I'd love to know what the actual real CPI data is. It's probably more like 20%. Than 10.4. And we also have some interesting data coming out this week. We've got CPI for France. We have CPI for Italy. We have mortgage applications. And we've got some GDP data coming later on in the week. And the big one on the 1st of every month, as long as it's a working day, is the ISM manufacturing for August, which will be really, really interesting to see what that comes out as well. Okay, shifting gears somewhat. Obviously, we've spoke about Bitcoin, and obviously it fell to 19.6k as investors continue to mull over the Fed's comments, and we can also hear see here. This is by James Rubin at CoinDesk. Largest cryptocurrency by market cap was trading at 19.6, down more than 2% over the previous 24 hours. ETH, the second largest crypto in market value, was recently changing hands at roughly $1,400, down more than 4%, as investors continue to chew over JP's vow to continue the monetary hawkishness the Fed adopted this year. And also it'd be really interesting to see what the Fed come out with their interest rates in September. Are they going to continue a 75 basis point rate hike, or will they slowly drop it to 50 basis points? If they do obviously go with 50 basis points, that will be incredibly bullish for the market, because by virtue that is to some extent a Fed pivot. So it'll be interesting to see how that plays out with as well. Whilst we're on Bitcoin as well, we've seen a lot of news around Mt. Gox, and this is from Cointelegraph. And basically, Bitcoin hodlers are asking questions after 10,000 Bitcoin dormant since 2013 suddenly left its wallets. And there's a few assumptions around this, whether it's because of the lawless era in Bitcoin back in 2013, where potentially people were involved in different activities, should we say, back in 2013, or is it Mt. Gox's wallets coming alive as well? So all Bitcoin is bearish in most cases. Think about Bitcoin being either one, minted in the lawless era, owned by individuals who can't use know your own customer custodian services, i.e. people who are a little bit shady, or distributed through multiple exchanges in tens of thousands of small deposits which don't require know your customer KYC. And we can see here some of the Bitcoin whale shadows animated animated. I can't say the word in a chart. And here we go, 5,000 BTC, which is certainly a considerable amount as well. And then final few things on Bitcoin. We've spoke about this previously in some of my other videos, but some compare the current situation with 2015, and this is from Plan B, really worth following on Twitter. Some compare the current situation with 2015 and conclude that we will stay low/blue for months. One big difference, in 2015, realized price in the grey line was still 2x above the 200-week moving average. In the black line, currently realized is below 200-week moving average, i.e. weak hands have already sold, which is interesting stuff. And that's from Plan B. And then finally, we've spoke about Australia building permits, and this is in San Francisco. This is from Strip Mall Guy. 25 million square feet of office space is now available in San Francisco with no end in sight. It's like Rome is falling. No words, just sadness. He also goes on to say that in suburbs, however, they also continue to flourish as well. So it looks like this work from home and people moving out of big cities has started to affect some of the larger cities in the US as well. Obviously, this being San Francisco. So that is everything for today. I will see all of you tomorrow as per usual. Click the subscribe, like, comment, all that jazz. And we will see everyone tomorrow.